Hello again, everybody. Today we're going to discuss the 5 most common IRS audit red flags and what you can do to avoid them. We get a lot of inquiries in our office about audits, and it usually goes something like this. The phone rings and the person on the other end of the lines is just already in DEFCON 1 panic mode. Oh my God, I just got this audit notice and I need your help or I'm going to go to jail. Okay, well, first off, let's slow down. More than likely, unless you've done something really criminal, you're not going to jail. I promise. I think you first need to understand that nowadays, the overwhelming majority of audits are all done through computer modeling. Okay, there's not some accountant sitting in some dark room with no windows with his visor and his pen protector, and he's just got you in the crosshairs and he's going to come after you for no reason in particular. More than likely what happened is the return you filed fell out of line with other income tax returns that were similar to yours. So here's what I mean by that. Let's say, for example, you're self-employed. Maybe you run a dry cleaner in Southern California. Well, then your income tax return is then matched with other dry cleaner owners in Southern California. And if you have some particularly exceptional tax deductions, maybe your income is really off, then yes, you will in fact get an audit notice. So with that in mind, let's talk about this at length and see what we can do so that you don't get one of those audit notices in the future. Red flag number 1. The single biggest trigger for an IRS audit is that taxpayers simply don't report all their income to the IRS. That's right. You received a W-2, you received some 1099s for side hustle work or stock transactions or what have you. And when you receive those, the IRS also received a copy of all of it. And then when the supercomputer down at the IRS gets a hold of your income tax return, the income you reported better match, or at least better be very close to the income that was reported by others that they paid to you. And if those two numbers don't match within a margin of error, you can be pretty much guaranteed that you're going to receive an IRS notice looking for an explanation on why they don't match. And if you can't provide that explanation, then you're going to be sent a bill and you'll have to pay it just like that. So, number 1 trigger to avoid over there at the IRS, report all your income from all sources. Audit flag number 2, your business loses money every year. Now, the IRS says that your business needs to show a profit 3 out of every 5 years. And if you're not able to do that, then you don't have a business. You simply have a hobby. And hobby losses are not deductible. I know everybody watching this video is really, really smart, but the IRS is onto you. You simply just can't take some little side business, report a loss every year, and have it offset your earned income from other sources. So, if you have a bona fide business, you need to show a profit 3 out of every 5 years and avoid this common audit red flag. Red flag number 3, over-aggressive business tax deductions. And we see a lot of this, in fact. And it goes something like this. You gave all your information at the end of the year to your accountant. He prepared your Schedule C, and he calls you back and says, there's good news and there's bad news. The good news is your income tax return is complete and ready to be filed. The bad news is you owe whatever, $15,000. And suddenly you panic. Uh-oh, what can I do to get that number down? Because I don't have that money to pay. And immediately you start scrambling. Oh my God, well, I can increase these tax deductions and I can add miles and this and that. And before you know it, you have yourself a runaway train, particularly with mileage on your car. And I'm telling you, we see some doozies. I have seen a tax return that had a $58,000 income tax deduction for miles. And if I back that out, I come to the conclusion that this person literally would have had to drive around the earth 4 times at the equator to make that mileage number balance. And once again, you have these crazy deductions. They don't match other people in your business code in your local area. And now you have an inquiry from the IRS. So yes, perhaps you should have made estimated tax payments throughout the year, and that's a topic for a different day. But if you want to stay out of the crosshairs at the IRS, let's keep to the reasonable business tax deductions. Audit flag number 4. You claimed the Earned Income Tax Credit, also known as EITC. Okay, so claiming the Earned Income Tax Credit is something of an automatic audit trigger, actually, but you probably wouldn't even know that the IRS is reviewing your return. The EITC is a refundable tax credit that increases with the number of child dependents you have. There are also income limits for qualifying for it. The IRS sends you a check for the difference if you're eligible to claim the EITC and the amount of credit you qualify for is more than the tax you owe. But the government doesn't want the IRS to send you any money before making absolutely sure that you are really entitled to claim those dependents and that your income reporting is accurate. If you're an early filer and you take this credit, you may have noticed that you actually won't receive a refund until mid-February. And the reason for that is the sensitivity around this issue. Behind the scenes, the IRS is double checking to make sure that you are the rightful claimant of your dependents and that your income qualifies for this tax credit. So don't take it if you aren't eligible for it. Otherwise, you're going to be right back in the crosshairs with the IRS. And lastly, audit trigger number 5, basic math errors. Yes, you heard me correctly. And I am particularly dumbfounded by this one, to be quite honest with you, because that it implies that you're still doing your return by hand with an ink pen. Yes, an ink pen. And I get it, right? Not everybody can be a math whiz out there. We all have our strengths and weaknesses in life, and not everybody's is math. Having an income tax return prepared nowadays isn't all that expensive. There are software programs out there. There are many places that'll turn and burn them for under $100. And I just got to say, loosen up the wallet, loosen up the purse strings, and have this thing done right. Because the money that you spend on it to have it done right is going to save you so much time and aggravation and stress and all those other things that go along with that IRS audit notice. So do the right thing here and get it done correctly the first time without any math errors. And stay clear of that audit red flag. One last point I would like to add before we end this video is simply this. If you receive an audit notice from the IRS or your local state taxing agency, it is not an automatic reason for you to just flip out. An audit is simply a mechanism to verify the accuracy of your income tax return. And if you can prove all your deductions and your tax credits, you have an excellent chance of completing that audit with any additional tax liability. So we always recommend do the right thing. File this return as accurately as possible, and you have no reason to fear an audit whatsoever. Thank you. And that's another edition of Tax Tip of the Day. Do you have an IRS problem you need resolved? Call the licensed tax experts at Patriot Tax Professionals, 877-782-9383. That's 877-782-9383.